Hi, my name is Brenda Bryant. I'm an instructor here at UNR Extension, and this class is called Before the Software, an Introduction to Accounting. So before you go out and look for accounting software, let's talk a little bit about the accounting process that the software goes through so that you'll have a better idea of what works best for you. So before we get started, I want you to take a quick look at what we call the roadmap. This is something that is put together by the Department of Business and Industry here in the state of Nevada. And it's a roadmap of once you have decided or you're just trying to decide about whether you want to start a business, what are the various things that you need to do. It is packed with resources. I highly recommend that you take the time to go to the website, and of course we do have the QR code and the website address. It is a wealth of information. Make sure you take a look at it. Okay, so let's look at what this class is going to be about. So we want to learn the basics of accounting, including financial statements, debits and credits. We're not going to go deeply into that. The accounting cycle. The course explains how these fundamentals support effective financial management and help you make better business decisions. That is the foundation of why you want to keep track of your money, because that helps you make better business decisions. So let's get started. When you hear accounting or finances, do you jump for joy? Oh, you probably jump, but I doubt it's for joy. Understand that you cannot run your business by the money, but you cannot run your business without understanding the money. So, welcome to the class. And let's talk a little bit about who accounting professionals are, what they do, and how they will fit into our business. So, one kind of accounting professional is called a bookkeeper. And a bookkeeper does the day-to-day data entry, puts your transactions in. If you go out and buy something, you bring in the receipt, you give it to the bookkeeper. The bookkeeper takes pertinent information from that receipt, puts it into whatever you're using to track your financial information, and that is called a transaction. Another kind of accounting professional is called an accountant, and an accountant can be either a private accountant or can be a public accountant and can work in a business. An accountant in the state of Nevada must be a public accountant and must be licensed by the state and certified by the AICPA, which is the American Institute for Certified Public Accountants. So in the state of Nevada, there is not an accountant that can hang out a shingle and say, I'm an accountant, come bring your work to me. I'll be more than happy to help you, unless that person has been certified as a CPA, a certified public accountant, and has been licensed through the state. The third kind of accounting professional you'll run into, and you do this quite often because this will be the thing that you probably look at every year, and that's your tax preparer. And your tax preparer will complete your tax forms so that they can be sent to the IRS. So your tax preparer also needs to have gone through a training program, be certified in that program, so that that tax preparer can accurately handle your information and get it to the IRS correctly. So we talk about CPAs, and as a small business owner, you may have heard someone say to you, oh, you need a CPA. Well, I don't know whether you need a CPA or not. You may not be at that point where your finances are have the extra, and I don't want to call it complication because it's really not that complicated, but you have more data and you have more things going in and out of your company that maybe a CPA may be able to help you, but probably you can handle it with a bookkeeper. So why do you pay more for a CPA? Well, first of all, a CPA must have at least a bachelor's degree. So they must have gone to college. They must have a degree. The second thing is that they have to have at least 150 college credit hours. They need to conduct at least 700 audit hours, and they must work in a CPA firm for at least 2 years. So you can actually go to school, get your degree in accounting, take the CPA exam, and not be a CPA because you haven't gone to work for a CPA firm or you haven't been there long enough or you have not conducted at least 700 audit hours. So they spend a lot of time doing this. And my understanding, I am not a CPA, my understanding is the test is not easy. So let's take a look at some financial terms that your accountant will use. One is cash. Cash means I bought it now and I pay for it now. So if I go into McDonald's and I ask to buy some iced tea, I buy it at that moment and I also pay them at that moment. In fact, at McDonald's, I pay for it before I get it. So that's the cash basis. The accrual basis is I buy it now, but I'm going to get a bill for it later. So if I go into Home Depot and I have an account there and I buy something and I tell them, please put this on my account, then at the end of that period, usually at the end of the month, I will get a bill from Home Depot that says these are the things that you've bought through this accounting period or through this month. And now this is the total of the money that you owe. Okay, so cash is buy now, pay now. Accrual is buy now, pay later. So some of the key financial statements that you will hear talked about are a balance sheet, an income statement, and a cash flow statement. Your accountant will be using this information to put together how your business looks from a financial standpoint. What you need to know about these three financial statements is how do you use the information so that you can make better decisions. The balance sheet is simply a snapshot of your business's finances at a particular point in time, and it looks at three areas: assets, liabilities, and equity. So it's called a snapshot because if I say, I would like to see your balance sheet as of the end of the year, then what's going to happen is I'm going to get a picture or numbers of your balance sheet as of December 31st, because that's going to tell me exactly what was happening at that time. Income statement is a little different. So an income statement is more like a video, because with that, you're going to be tracking money coming in and going out over a period of time. So if I say, I would like to see your income statement for the year, it's going to go from January 1 to December 31, and it's going to tell me what has happened during that time. I can break it out into months so it can show me the activity that's happening every month. I can look at what's happening at the end of the year at December 31st, and it's going to show me the activity that has happened during the year. And this is what your income statement says that you have made. That's money coming in. and you have paid, that's money going out. And then your cash flow statement is a highlight of looking at how well you manage the expenses that the business has to handle. So we're going to look a little further at these. So we look at a balance sheet. We have three things that we're looking at. We're looking at assets, we're looking at liabilities, and we're looking at equity. So with assets, that's what you own. I purchased this for a certain amount. Went out and bought a truck. I purchased a truck for $25,000. My truck is an asset, and my asset is worth $25,000. Liabilities are what you owe. So let's say I have a loan. I have a loan for $100,000. That's what I owe. My loan decreases every time I make a principal payment. So if I have paid $500 or $1,000 on against that loan for my principal, then my loan has been reduced by that $500 or $1,000. And equity is what am I worth? If I look at my assets and I subtract my liabilities, it gives me a picture of what my business is worth. So when I look at, sorry about that, when I look at an income statement, I'm also looking at basically three things. I'm looking at income, revenue, money coming in. So how am I getting money into my business? Expenses, how am I paying money out of my business? And this is the only document that we have in the financial statements that allows you to have a minus. It actually allows you to say, I made money, which is a profit, or I lost money, which is a loss. Balance sheet must be balanced. The assets must equal the liabilities plus the equity. Income statement, I could have brought in a certain amount of money, but spent out even more than I brought in. That's a loss. I could have brought in a certain amount of money and spent less than I brought in. That's a profit. And then when I look at cash flow statement, I'm looking at several areas of the business. I'm looking at how well do I pay my bills? Am I paying them on time? Do I have the money to cover the bills that I have? That's my operations piece. I'm also looking at how well am I investing in the business? Am I going out and buying pertinent equipment that I need to use so that I can keep the business running? And then from a financing standpoint, I'm looking at how well am I managing my debt? Okay, do I have a lot of debt out there that I'm paying on? How much is my business really worth? What's that equity that I have in the business? And what are the dividends if you're paying out dividends to your shareholders? So let's talk about some financial no-nos. The number one financial no-no, the big financial no-no, is always keep your business and your personal accounts separate. Do not mix them under any circumstances. That is called commingling, and that is a very bad word according to the IRS. So you want to make sure that you keep those two separate. If you have a credit card for your personal and you have a credit card for your business, get them different colors. So it'll trigger that when you pick up the green card, you go, oops, that's personal. Let me put that one back. Let me get the blue card. That's business. So that'll be a little trigger that will help you keep that separated. Always, always, always reconcile your accounts. What does reconcile mean? Reconcile means that I am looking at the bank statement that comes from the bank and tells me the activity that I have had during that month. And I'm going to match that against the things that I have put into my accounting system and say, do the bank and I agree? If the bank and I agree and I come up with no more, the bank doesn't say I spent more money or I don't say I spent more money, we come up with the same amount, then I have reconciled my account and it says that, okay, the bank and I agree on the money that's coming in and going out. And then my financial statements, please take the time to review these. It is so important not only to review them, but to know what they mean. So you want to review this to see how your business is doing. Are you on track? Is your business moving in the direction that you want it to? Is there something that you need to do to step back and say, let me tweak this, move this, modify this, whatever it is that you have to do? Remember that the financial information that is put in front of you is to help you make better business decisions. So I hope that has helped you understand a little bit about the software that you may be purchasing, the financial professionals that you may be hiring, whether it's going to be someone in your office, whether it's going to be an outside firm, okay? But just make sure that you're feeling pretty good about what the next step is. If you have any questions, you can always contact me. My information was on the front. And spend some time learning more about how your money moves. We have some other classes that you can also take, so feel free to do so. We also have, this is our virtual classroom, and so we have a lot of classes in there. They're broken down into startup classes, marketing classes, management classes, finance classes, and operations classes. So please take the time to go in, look for what you need. If you find that there's something that you would like for us to teach and we don't have it there, please let us know. We also have a podcast called the Biz Life Podcast. And this is a fun place where you can get to know some more about some of the resources that are out here in Nevada, some of the things that people are doing, and talking about real life experience of business owners, what they're doing, how they're making a difference in the community, in the small business community. And as they make a difference in the small business community, that elevates us all. It helps all of us within the state and in the country as we build. So please take a look at our Biz Life podcast. I think you'll like it. And then one other thing that I do recommend, please make sure, if you have not done this already, please go to Nevada, SBDC.org, request advising, and get an advisor where you can have that one-on-one conversation about your business as you grow. So you saw the website, and then you go to this page where it says new client sign up, and that's how you sign up for the SBDC. Please understand that we have locations all throughout the state. The SBDC as a whole is nationwide. The SBDC offers one-on-one advising, and it is at no cost to you. Take advantage of it while you can. And thank you very much for taking the time to go through this class. As I said, my information is also right here. You can email me if you like. If there's something that you would like to have a class on that you have not found in our virtual classroom, please let me know and let me see what I can do to help you out. Thank you.